to get started with our webinar today. And today we're talking about the optimal state that people should incorporate in. And my guess is, as an accountant, you often get questions from people kind of idly about, I may want to start a company. What kind of form should I have? Where should I put that organization? Maybe if you've got an existing organization, a common question I get is, should I move? Is it more advantageous to do that? So topics we're going to talk about today is where's the right place for that to be. So now if you go ahead and share our slides for today, I'm going to host today's webinar that we have. My name is Tom Wadelton, and I work with Summit Virtual CFO by Anders. I'll tell you a little bit about our organization in just a moment about that. So a couple of housekeeping things as we are getting ourselves started here. We do have a 50-minute presentation for you today. We're going to have 3 different polling questions for you, or we need to make sure that you answer at least 3 of the polling questions that are going to be done, and we'll let you know when those come up. If you do that, we will go ahead and send out the CP certificates to you. So those will be done via email. We don't currently have material that came out ahead of time. We will send out the slides, and replay will be available via YouTube. One really important thing, also, people aren't on audio where they can speak to us today, so the question function becomes really important. I'll be monitoring as you have questions during the presentation. I'll ask Nellie those questions, and we'll do our best to get those answered. Some of those we'll go ahead and type answers if it's not really the forum to ask them verbally, but that's what we'll do. So those are most of our housekeeping topics. So on to our speaker and guest today. Oh, sorry. Let me jump back and tell you a little bit about where we're from. So I mentioned I work for Summit Virtual CFO by Anders. Summit was started as a traditional CPA firm, taxes, audits. This was started a little bit more than 20 years ago. You can see our 2 founders, Jody and Adam, in that picture. Fairly early on, starting in 2004, we started offering back office and accounting services to our clients. So those were CFO related services. If you keep advancing the slides, you'll see that then in 2013, we went on to a distributed firm. So ditch the office. We have clients and employees in all over the United States, gives us tons of flexibility. Middle of last year, we joined with Anders CPA and Advisors. And so we're really excited about that merger that happened. And so as of today, we are Summit Virtual CFO by Anders, so a division of Anders, now a hybrid organization, as Anders has an office in the St. Louis area. Summit, as I mentioned, was a remote firm. Okay, now on to our presenter. Nellie Akalp is the CEO and founder of CorpNet. I've talked to Nellie before, and I'll mention a little bit later the podcast that we'll be launching with her. That was a very interesting show. And Nellie, welcome. And by way of introduction, maybe you can tell us a little bit more about yourself.
Thank you so much. I'm so grateful to be here. Hi, everyone. My name is Nellie Akalp. I'm CEO and founder of CorpNet. Our mission here at CorpNet is to provide a scalable, easy platform for all of you as financial advisors, CPAs, accountants, to provide solutions to your clients when it comes to business filings, payroll tax registrations, the new BOI report filing that is coming up as a federal mandate beginning January 1, 2024, and compliance services in all 50 states. Today, I lead the team at CorpNet. CorpNet's been around since 2009, and our mission, again, is to educate, support, and help all of you in providing the most comprehensive, cost-effective services to your clients when it comes to any aspect of the business startup and compliance services in all 50 states. So without further ado, I'd like to get into our webinar because we have a lot to cover today. Tom, may I, or did you want to say anything else here?
Nope, I am good for you to go ahead and launch in.
Okay, awesome. So today's webinar is about selecting an optimal state to incorporate a business in. I'm sure many of you get the question from your clients walking in as to where should I incorporate? I hear about Delaware, I hear about Wyoming, I hear about Nevada. So my agenda today will be to review how you can understand the different options available to help you decide in which state your clients should register the business. And we'll cover I'll give you a quick overview of the importance of business incorporation. We'll go through a business entity refresher course, considerations when selecting a state to set up that corporation or LLC within, weighing your pros and cons, doing business in another state. If you have a client that is already established as a corporation or an LLC within their home state, and now they're wanting to expand their business in multiple states. And then we're going to be talking about moving a business from one state or another. You may have a client that comes in and goes, hey, I have an established corporation or LLC. I don't want to lose the longevity of that business. Can I convert out of my current state and convert into another state? And then we're going to go over all of the tools and resources that are available to you. So let's talk about benefits of incorporating a business. As you know, the most important benefit of incorporating a business is liability protection of personal assets, okay? I'm sure you have sole proprietors and general partnership clients that may be wondering if it's time to create a formal business structure. And if your client is still on the fence about incorporating or setting their business up as an LLC, here's some major reasons a small business would choose to incorporate. First and foremost, liability protection. Why? It's because a corporation is a separate legal entity apart from its owners. Just kind of picture me as a business owner with this bubble around me. When you form a corporation, it creates a corporate veil around the business owners. Other benefits include it being added credibility. Oftentimes, business owners who have that INC LLC next to their name are likely going to be more credible in the eyes of clients and vendors that they're dealing with. So there's added credibility by setting your business up as a corporation or an LLC. There's also perpetual existence with a corporation or LLC, which means the corporation or LLC will continue even if one of the owners dies, unless it's formally dissolved. Last but not least, there is a lot of tax flexibility with corporations and LLCs. And oftentimes, when you separate that business from the owner, there's a likelihood that you're able to deduct more expenses. So again, here are the benefits. We urge you to take each of your clients' scenarios and not make it all in one. But generally, the benefit of incorporating is liability protection, asset protection, so that God forbid, if your client is entering into a lawsuit and they're on the wrong end of it, they can hopefully be protected by the person who's trying to go after them in a suit is not going after their personal assets, be it a car, a house, a savings account, or a retirement account. Now, let's talk about the different entities, okay? There are different business entities that one is has, that are faced with as options that one can set that business up. Most common and most simplest form of business entity is a sole proprietorship, meaning one person doing business under their own name or under a fictitious business name. Literally very simple to form, actually not really much to form a sole proprietorship because you as the business owner are the business. So let's say I start a consulting business and I go out and somebody is retaining me for my consulting services. If they hand me a check and write it out to Nellie Akalp and I deposit it into my bank account, that's income to me. I'm coined as a sole proprietor, okay? However, be aware with a sole proprietorship, there is no separation of liability and there's no transferability of interest. And, it is a pass-through entity, meaning that income earned by the business is income earned by you. It's not a separate entity, meaning you are the business, and God forbid if you're sued, then you're liable. They can likely come after you, your house, your car, your personal assets. very similar is the general partnership. I like to call a general partnership a marriage, because whoever your partner is, you are married to them. I mean, it's worse than a regular marriage, okay? They do something, you're liable. You do something, they're liable. So look at it like this. It's two people doing business under their own name or under a fictitious business name, and no liability protection. Your partner commits a crime, guess what? They can come after you, they can come after them, they can come after both of you jointly. No separation of assets, you are personally liable. LLCs, now let's get into the realm of separate legal entities. I want to talk about the LLC first. Reason being that an LLC is the most common business structure, which is the simplest, where I kind of like to call this, you get to have your cake and eat it too. Why? Because you get all of the benefits of what a corporation would provide you as far as liability protection, asset protection, but without all of the formalities and paperwork. So with an LLC, for it to come into life, you need to file what are called articles of organization with the state that you're trying to file the LLC within. Once it's filed, it is a separate legal entity. The members of the LLC are the owners of the LLC, and the operating agreement is the single piece of document that controls that LLC, meaning that that is the rules of how that LLC is governed and how the members' interests are governed are all stated within that operating agreement. Is there liability protection? Yes. Is there transferability of interest? Yes, but sometimes limited. The duration is unlimited, just like a corporation. It must be formally dissolved. And guess what? With an LLC, as I mentioned to you, it's a hybrid between a corporation and a proprietorship. So again, you get all the benefits of liability protection and asset protection without all of the headache. However, keep in mind, because an LLC has that hybrid element, single member LLCs are coined as a disregarded entity. What does that mean? It means that all of the income and losses pass through and are reported within the business owner's personal income tax return. That is why it's called a hybrid entity. So by default, unless that LLC makes an election to be taxed as an S Corp or a C Corp, it is taxed as a sole prop. Alternatively, if that LLC has multi-members within it, it's taxed as a partnership unless it's elected to be taxed as a C Corp or an S Corp. Moving on to the C Corporation. C Corporation is the most formal type of entity out there. You have to file articles of organization to bring that C Corp into existence. It's the highest form of legal entity that's going to give you the highest form of protection when it comes to liability and asset protection. There is absolute transferability of interest, and the duration is unlimited unless you formally dissolve that company. It is not a pass-through entity. With the C Corporation, oftentimes you'll see that we talk about double taxation. What does that mean? Owners are taxed at the corporate level, and then once the owners that are called the shareholders of the company get a distribution, they're taxed on the individual level, thereby double taxation. How do you get around this? You get around this by electing S Corp status. So although we've listed the S Corp here, please note, an S Corporation is not a type of entity. It's a formal tax designation that's often elected by an LLC or a C Corp. So when the C Corp or the LLC elects S Corporation status, then that C Corp or an LLC is viewed as a flow-through taxable entity. It's called a pass-through entity. Now with the S Corp, either the LLC or the C Corp having to elect it, there are very strict requirements that have to be complied with in order for that S Corporation election to be approved by the IRS. first and foremost, maximum of up to 100 shareholders. Shareholders have to be US citizens or residents. The election has to be made within 75 days of that LLC or corporation coming into existence, and the election has to be signed by each of the shareholders. So when you're looking at business entities, you want to consider the following when you're talking to your clients. Where is the business going to be conducted? Are your clients wanting to have personal liability for business activities? Whether the business will have investors or partner, the company's expected earnings and deductions. Is there a desire by your client to minimize self-employment tax obligation? If it is, then believe me, LLC without any election is not going to make sense. They may want to opt for that C Corp with the S Corp election. Their business goals, tolerance for compliance formalities, registration and administrative costs to set up and maintain a business structure. So these are all the things that need to be considered, and these are the questions you need to ask your clients. Does your client have any personal assets? Is your client concerned about personal liability? Does your client need to live off the business profits each year? Does your client want to keep paperwork and administration costs as simple as possible? And does your client want to keep the business forever? With that, we're in time for our first polling question. Tom, back to you.
Yep, cool. Thank you, Nellie. And let me go ahead and launch that polling question for people. And I'm going to leave this up probably, I don't know, a minute or so. So people really need to. So do you manage business? That polling question is up, and I will go ahead and shut it down once we get probably 80 or 90% of the people to answer. So we're good for you to continue. I see people going ahead and answering this poll question. As it finishes, do you want me to come back and tell you the answers for this?
No,
or not necessarily. Okay.
All right, guys, so let's get to considerations when selecting a state. This is the meat of our webinar today, so I want to get into this. So variables to consider when your client is set and they've decided they want to set up a corporation or LLC. Now, the next big question is, where should I set up that corporation or LLC? So there are many variables to consider. Clients should review the lowest cost and best option for their situation. Here are some good points of discussion. They want to talk about, they want to look at the formation fees for that state, annual fees and filings, franchise taxes, because some states, have franchise tax fees, such as where I live, California, and some don't. You want to also look at the legal and court system. In addition to that, let's say your client from the get-go has an exit strategy, or from the get-go wants to raise capital. You want to take a look at what the investor outlook is for that state. And then you also want to look at state corporate income tax, because some states, there will be no corporate income tax. Others, have gross receipts income tax. So you want to take care and take a look at all of these variables when considering a state to set up that corporation or LLC with it. Now, here's a general rule to remember. If a business is incorporated in one state, but the owner lives and conducts business in another state, their home state, they're responsible for state fees and taxes in both locations. Okay, so let's say company has a corporation in let me tell you this, okay? Let's say you're incorporated in Delaware, but your principal place of business is in California, okay? And the majority of that business is conducted in California. Guess what? You're going to be responsible for state fees and taxes in both Delaware and California, and both states' laws are going to apply to you. Now, if a business has fewer than 5 shareholders, it is more advantageous to incorporate or form an LLC only within the home state. And the general rule of thumb that I'm going to go ahead and give you here is, no matter what the variables, no matter how attractive Delaware, Wyoming, Nevada, and all these other states are, the general rule of thumb is, if your client lives and conducts the majority of their business in a particular state, it behooves them not to set up that corporation or LLC within that state. Now, don't forget about Nexus. Nexus, what we're talking about here is connectivity, okay? When a business has Nexus in another state, it implies the company has connection to the state in some way. There is no specific shared definition of Nexus across the 50 states, and the rules for determining Nexus change constantly. We have a 50-state guide on Nexus that's posted on our blog, located at www.corpnet.com. Feel free to take a look at that. But in general, a business has Nexus when it has physical presence, like an office, store, or warehouse in that state. Economic activity without physical presence might also constitute Nexus. Most states also may have a threshold that requires sales tax nexus for companies with more than 200 sales transactions or 100,000 in sales within the state annually. Now, initial filing fees are another big one to consider. Every state requires a one-time fee for forming an LLC or corporation. So you definitely want to take a look at what the initial filing fees are for that state. Annual filing fees are a big one too. Many states require filings and fees on an annual ongoing basis to keep a business in good standing. Usually this will happen by filing what is called an annual report or an annual statement of information with a filing fee to submit, and failure to file this annual report can cause that company to go into bad standing. Example of other possible filing fee and requirements could be, when you're trying to modify, when you're trying to reinstate, when you're trying to make a change to that corporation or LLC, state franchise tax fees, and also if you're trying to dissolve that corporation or LLC. Now, public information and online filings is something you definitely want to check and consider when, considering to form a company within a state. Public access to information and ability to file and retrieve documents is a big one. As we've listed here, there are some states that offer this very easily: Florida, Delaware, Wyoming, Nevada. But, again, the general rule of thumb is you want to take a look at where the client is doing the majority of its business, where the majority of that connectivity is to that state, where the majority of the business is being conducted and the money is being received. State corporate tax is another big one. Some states levy no income tax, such as Alaska, Florida, Ohio, Nevada, and many other states. As you see here, some states also have no personal income tax, such as Nevada being a big one, Florida being another big one, Texas, Washington, Wyoming, Alaska, South Dakota. Companies that operate in these tax-friendly states and in other states will still need to pay income tax and other applicable taxes, even though they're not required to pay any personal income tax. Franchise taxes. This is another big one, and it goes to your business as a corporation or LLC being compliant with paying its franchise taxes. So franchise taxes calculations vary by state. However, it's important that you check with that state that you're trying to set up a corporation or LLC to ensure whether there is a franchise tax that will be levied on your corporation or LLC so that you can maintain compliance. One thing that I want to bring up, and I keep bringing up here, is there is a new federal mandate that is going to be happening as of January 1st, 2024, which is a federal mandate that's come down by the fincen.gov website, which basically is a mandate that beginning January 1st, 2024, all corporations and LLCs, whether domestic or foreign, if they are considered and qualified to be a reporting company, must submit what is called a beneficial ownership information report to the Bureau, which is fincen.gov, reporting information as to the beneficial owners of that corporation or an LLC. What is a beneficial owner? A beneficial owner is an owner of a corporation, i.e. a shareholder, or an owner of an LLC, i.e. a member that has a membership interest of at least 25% or more. And basically what we know as of today about the BOI reporting mandate is that any existing entity that is already a corporation or LLC that qualifies as a reporting company and does not fall under one of the 23 exemptions that are provided by FinCEN must file this beneficial ownership information report on or before January 1st, 2025. If it's a new company that is created on January 1st, 2024, or after, they have 90 calendar days from the date of filing by the Secretary of State's office to file that initial BOI report. If it's a company that's created on or after January 1st, 2025, they have 30 calendar days. Again, if you need more information on this, our website has detailed information about this that's being updated on a daily basis, and we can file this beneficial ownership information report on behalf of yourself and any of your clients for any entities they own. Now, legal system is another variable that you may want to consider in forming a corporation or LLC. Again, you want to check and see if the legal system is favorable to your business when setting up that corporation or LLC in that state. Investor appeal is another one. Again, if you're a company that's seeking to raise capital, you want to make sure that state has investor appeal for you. We are now in time for our second polling question. Tom, back to you.
Cool. Okay, let me go ahead and launch that. And so we are asking people about how they're currently managing this. So you mentioned the new rule, but for existing rules, how people help manage this on their own behalf and on behalf of their clients. So similar to last poll question, I'll go ahead and leave this one up for a little while, let people answer, and then I'll go ahead and close down the question. Are there really business-friendly states?
Let's see. So let's talk about business-friendly states. Well, what did we talk about when there is business-friendly states? Well, if clients want the best possible tax setup without many burdens or regulations and don't want to relocate, the ability to incorporate in one state and live in another state can be a huge help. Now, while each state is different, some states simply stand out as good choices for incorporation. So the big states, Delaware, Wyoming, and Nevada, are all ideal choices due to their business-friendly rules, enhanced privacy, and knowledgeable court systems, okay? But there's also disadvantages too. So let's talk about Delaware quickly. There's flexibility, there is privacy, okay? There is a favorable court system, okay? So these are the big advantages. With flexibility, Delaware offers businesses lots of flexibility when it comes to corporate and board structure, making it easier to set up a business. Officers and directors do not have to live in the state. You can run the business solo, whether other states require at least 3 individuals to be directors or officers. There is a lot of anonymity and privacy. You don't have to disclose key details about officers, directors when a business is formed. And with the court system, Delaware uses judges instead of juries, which tends to be more favorable for business owners, okay? More advantages with Delaware are investors. Many investors and banks show strong preference for Delaware corporations, and with the taxes in the state of Delaware, you got business-friendly tax laws. If a business is incorporated in Delaware but headquartered elsewhere, generally clients will not have to pay state income taxes, okay? Here are the big drawbacks of setting up a company in Delaware. It's not ideal for a small business. Most of the benefits are with respect to larger corporations, and there's an added expense. As I mentioned earlier, if a business is small, incorporating in Delaware will likely cause multiple filings and additional expenses if the majority of your transactions are within the state that you're conducting the business, the shareholders are living, their employees are located. So if I'm, doing the majority of my business in California, but I incorporate in Delaware, I'm subjecting myself to both Delaware and California state laws. Let's talk about Wyoming. Again, Wyoming, huge flexibility, okay? Clients have several options to run their businesses. Individuals who will be running the day-to-day operations will have to be identified when the incorporation or LLC filing paperwork is filed. There's also business incentives. Wyoming offers several incentives to businesses that wish to incorporate there. There's no corporate income. There's no corporate state income tax or franchise tax for corporations, and annual report filings remain very low in filing fees. Also, Wyoming does not collect personal income tax and has a low sales tax rate at 4%. Exceptions are for manufacturing equipment and other type of similar purchases. The big disadvantage with Wyoming is there's fewer benefits for remote businesses. If your client wishes to incorporate in Wyoming and lives elsewhere, they may not reap many benefits from setting up, the corporation or LLC within the state of Wyoming. Nevada is a big one, okay? Lots of companies, set up in Nevada, and a corporation or LLC can be formed in Nevada even if you don't live in there. In Nevada, taxes. Nevada has no state taxes for all types of taxes, not just corporate income tax. And your client will not have to pay typical state levy taxes such as corporate income tax, unitary tax, estate tax, gift tax, personal income tax, franchise tax on income, and admission tax. Privacy. Nevada does not require owners to list names in order to incorporate. Thereby, clients and or investors can remain anonymous, and asset protection as with any other corporation or LLC. Now, here are the big disadvantages. Nevada's high fees. Nevada has high incorporation fees and costs compared to the other states, and it requires a business license to renew the corporate status or the LLC status. So at the anniversary of that corporation or LLC, Nevada is going to hit you with a mandatory business license registration fee, in addition to the annual corporate filing fee for the annual report. And here's another disadvantage. There's a stigma by setting up a corporation or LLC in the state of Nevada. Why? Because some may see corporations formed in Nevada and operated elsewhere as illicit or having some sort of an illegitimate purpose. We are in time for our third polling question. Tom, back to you.
Okay, yep. So people probably remember that we want you to answer 3 polling questions. So when we talk about frequency of filing, how frequently are you, or sorry, not frequency of filing, frequency of forming entities. So ask people kind of how often this is something that they do.
And while we're doing that, let's go ahead and weigh our options as to what's best for you and your clients. So home state versus out of state. Again, if a business is small, the benefits of incorporating in another state will be outweighed by all the extra costs and administration work created. Generally, a business with fewer than 5 shareholders will not benefit. Doubling the paperwork and administration for running a business in a home state and out of state. If the majority of the business activities will be conducted in your home state, usually favorable to incorporate or set up that LLC within that home state. Now, if the business operates in states other than the state of formation, it will also have to foreign qualify in those other states. Why? Because if the business, in addition to setting up in their home state, has connectivity or nexus within those other states, it will most likely have to foreign qualify in order for that corporation or LLC to do business in those other states. Now, how to do business or expand a business into another state, which is where we're getting to. What are we talking about here? Many of you may have heard of the concept of foreign qualifying a business, foreign qualifying a corporation or LLC from its home state into other states that we call the foreign states. So if you have a corporation or an LLC, and if you wish to expand that corporation or LLC, or if your clients wish to expand that corporation or LLC into new state, you will likely need to register the business within that other state. We call it the foreign state. And this process is known as foreign qualifying that corporation or LLC in other states, in addition to the home state or domestic state that that corporation or LLC is set up in. Now, when we talk about domestic and foreign, I want to hit home here with you. Domestic and foreign in this context refers to the state where the LLC or corporation is being created. A company which is registered as an LLC in Michigan and which does business, for example, in Michigan, okay? So, for example, if that company is registered as an LLC or corporation in Michigan and also does business in Michigan, is operating as a domestic corporation or LLC. However, if that same company is doing business in the state of Illinois and has physical presence in the state of Illinois, it is operating as a foreign corporation or LLC within the state of Illinois. This commonly comes up when LLCs are formed in states with business-friendly tax laws but do business in their home state. It may also occur when a business starts expanding into other states. So a foreign LLC is required to register with the Secretary of State in that foreign state. And before they can register in that foreign state, their home state has to basically condone them as being in compliance within their home state. Now, what qualifies as doing business? Again, when reviewing the need for foreign qualification, you have to look at the business activities. You have to look at nexus, okay? The exact definition of doing business can vary from state to state, but typically it equates to business has physical presence, office, warehouse, retail store in that state. Business conducts in-person meetings with clients, customers. The business is structured as a corporation or LLC or limited partnership. Business has employees living, working in that state. And you, in addition, if that corporation or LLC has reached a sales threshold within that state. What doesn't qualify as doing business? Defending a lawsuit, dealing with internal LLC or corporate business, such as member meetings, having a bank account with that state, selling through independent contractors, securing or collecting debts, or conducting an isolated transaction that's completed within 180 days and not repeated. How to apply for foreign qualification? Again, we can do all of this for you in any of the 50 states. However, if you wanted to do this on your own, first and foremost, they need to make sure the name of that corporation or LLC is available within the state that they're trying to foreign qualify as a corporation or LLC. Next, you got to obtain a certificate of good standing from the state that that corporation or LLC is originally formed. And that state has to say, hey, this LLC or corporation is in compliance, is being a good boy or a good girl, and is keeping up with all of their filing requirements as a domestic corporation or LLC. Then what you do is you have to designate a registered agent within that foreign state that's going to be able to act as the registered agent for service of process for that corporation or LLC within the state that you're trying to foreign qualify that corporation or LLC. Next, you gotta draft and submit a certificate of authority or the foreign qualification filing requirements to the state and within the state that you're trying to foreign qualify that corporation or LLC, along with that certificate of good standing from the home state. And again, state fees will apply to this, and it can range from anywhere from $50 to several $100s. And then you got to wait for the state to approve that filing. And then once it's approved, then you can start conducting that corporation or LLC as a foreign corporation or LLC within that foreign qualified state. Now, what are the risks of not filing for foreign qualification? there can be a lot of penalties. Failure to foreign qualify when it's required can cause significant issues for the corporation or LLC for your business clients, including being penalized for operating illegally within a state where the business is conducted. So we've listed the penalties here for you. The other requirement is employees and payroll tax requirements. So let's say you have employees living in different states from where the business is located, where the corporation or LLC is set up, okay? What do you do then? Well, as an employer, you must withhold and deposit federal taxes and withhold state income taxes in the state where the employee lives. Employing workers in other states requires your business to register within that state's agency. So I'm sure you guys have a lot of clients who come to you and say, hey, I have an employee who's going to be, living in state X, and I need to process payroll for this employee and pay this employee through payroll in state X. Guess what? You have to register for payroll taxes within any state that you're paying an employee through payroll. This is a service that we provide in all 50 states. We can set up the state income tax withholding account, and we can set up the state unemployment insurance account. In addition, as you may be aware, there are some states that require local tax filings as well. We can take care of that too. So we can do it all for you in all 50 states. And guess what? We take the headache off your plate. We take the legwork, and we take on the legwork so you can do what you do best, is focusing on growing your practice and attracting more clients in the door. So leave all this stuff to us and focus on growing your practice. Now, how do you move a corporation or LLC from one state to another? This is a question I get a lot. And guess what? Right now is the perfect time to do this before the beginning of the year. And I'll tell you why, okay? If you were to ask me, hey, what are those 5 or 6 must-do business tasks that my clients can't miss, that I should be focused on with my clients before the first of the year, I'll tell you, first and foremost is incorporating and setting up that corporation or LLC, number 1. Number 2, making sure if your client is an existing corporation or LLC, making sure they have all their legal ducks in a row and are compliance proof before 2024 comes around. What does that mean for a corporation? Have they filed and have they drafted their annual meeting minutes and filed it away at their principal place of business where the corporation is located? Annual meeting minutes are required for a corporation, no matter how small that corporation is. Even if it's one person, you have to draft them every year. It's gonna bite you in the tushy, God forbid, if your client is sued, because it won't be a big deal unless there's a lawsuit. Once that lawsuit comes around, they're going to try to do everything to pierce that corporate veil. Okay. So compliance, the BOI report filing, which is now a new mandate. Okay. Dissolving a corporation or an LLC. Let's say your clients have an inactive business and they want to shut it down before 2024. They better dissolve now, because guess what? If they don't, they're still going to have to pay compliance fees. They're going to have to file that beneficial ownership information report. So dissolving an inactive business by filing a dissolution for the original home state entity. And if they're foreign qualified, they're going to need to withdraw. Okay. Let's say they want to move a corporation from one state to another. This is the topic. Okay. That's another big one. Also, converting an entity from one state to another, or converting an entity from one entity to another. So let's talk about how to move a corp or an LLC from one state to another. Business domestication. So if your clients have decided to relocate to a new state with their business and want to keep the business duration or longevity, a domestication is generally recommended. Domestication is referred to when it's moving a business to another state. When completed, it no longer exists in the state where it was initially formed. Keep in mind, not every state allows domestication, and however, those that do, we can convert out and convert into a state. Those that do not offer domestication, you simply dissolved within the state that you're originally formed, and then you form within the new state. Step to domesticate an LLC or corporation. Again, we've listed it out here for purposes of timing. I'm going to let you guys read this, but again, it's super simple. If the state allows it, we can do it for you. If it's not allowed, then we would have to dissolve in the original state and set up in the new state. And again, all of these services and more are available through reputable companies such as our company, CorpNet. We are in time now for our last polling question, Tom.
Okay, and you've mentioned CorpNet a couple different times, so this question gets to, do people want to learn more about it? So that poll question has been launched.
Thank you. And again, I've gone ahead and when we're talking about steps to domesticate or re-domesticate a corporation or LLC, again, the requirements will vary from state to state, but it basically, the domestication process generally involves applying for domestication in the new state and dissolving the business in the state where it was originally chartered. Every state will vary, but we've listed out the steps here for you. I want to go over some helpful resources that our company can provide you with. Again, our company CorpNet is a legal filing service that can provide you with the most comprehensive, cost-effective services when it comes to creating a easy, simple platform for you and your clients to be able to process any type of business filings, whether it's setting up a business, starting a business, expanding a business, business tax registrations when it comes to payroll tax registration filings, state tax registration filings, and then all of our compliance services, including the new business ownership information report mandate that's about to go into effect as of January 1st, 2024. In addition to all of that, we have a plethora of resources at your fingertips. We have a business name search tool that you can check the name of a business. We have an interactive business structure wizard tool where you come in, you're not comfortable with telling your client the type of entity they should choose. You can go through the wizard, and the wizard, created by attorneys and accountants, can pop out an answer for you based on the answers you provide them. We also have a compliance portal with monitoring and proactive alerts. Let's say you're managing hundreds of thousands of entities across your clients for multiple clients. You can simply come in here, register the entities, and we'll manage it for you. And we'll provide you with proactive alerts as to when those entities are due for any type of compliance filing, annual filing, business tax, payroll tax registration filing, anything that is compliance related. We also have an annual meeting minutes drafting service. So if you have clients that are operating as a corporation or an S corporation or a nonprofit, we can draft their annual meeting minutes for any year that they don't have annual meeting minutes drafts. That plus we have a plethora of guides, checklists, and our CorpNet blog that gets updated 3 times a week. Now, some of you may be wondering, how can I offer CorpNet services to my clients? Guess what? We have an amazing partner program where you can also partner with us. So you can become a CorpNet referral or white label reseller, and you can start either referring your clients to CorpNet and getting a commission, or start offering our services to your client as a white label resell partner. You can refer to enhanced services, you can resell to attract more clients and increase revenues. The program is designed to help you. It's designed to mold to whatever your needs are. There is no setup fees, there's no annual fees, there's no ongoing fees. It's a pay-as-you-go service designed to meet your needs. So if you're interested about learning more about the CorpNet Partner Program, offering our services, allowing us to service your clients' business filings, your BOI report filings, your compliance filings, check it out. It's located at www.corpnet.com. www.corpnet.com/partners. It has been an absolute pleasure presenting to all of you. Tom, back to you.
Yeah, we have just a couple slides to close. And Nellie, thank you very much. What a great picture of your team that's there.
Thank
How
you.
recent is this picture?
This is actually a couple of years ago. We're due for a new one. I will tell you that. And it's grown much more than what you see here. We're now upwards of 200 people within the company.
That's
and you know what? I'm grateful. I'm grateful to be able to do what I do. So thank you so much for the
That's
opportunity.
really cool. Yeah, we don't have open questions, but we do have a couple of things to close with. So on the next slide, you'll see there are some opportunities to keep learning. We have multiple podcasts. The one that probably appeals to this audience is the Modern CPA Success Show. So targeted for CPAs, especially forward-looking CPAs. I will let you know that we're doing a podcast with Nellie, and that's going to launch on April 15th. So if you liked what you heard about CorpNet, we go into a little bit more about CorpNet and the partner program and things within that. So you may keep that on your mind. You can get it there via YouTube. You can also access it via Earmark CPE and get CPE when you listen to those. If you'd like to be a little bit more interactive, you can connect with us. So we have a CFO community in Slack. You can see a 1 month free access on here. And so we ask people to go ahead and set up for that. We've got a lot of CPAs, including our firm, but others on here asking questions, exchanging information, doing different things within that. So we'd encourage people to check that out. I mentioned that I'm with Summit Virtual CFO by Anders, and we've got a course. So if a little bit of what I teased you with on what I do sounded interesting, we've got a course that shows everything that we do. It's a pretty intensive course, 24 CPE credits that you'll go through, but it will go through every single thing that we do and come along with coaching sessions, subscription Slack community. We meet weekly with a group of people to kind of exchange information and also share tools like our pricing tool and how we do different things. So hopefully that would be cool for people. And finally, if what we do sounds interesting, but you don't want to do it by yourself, we are hiring. So you can check us out on summitcpa.net career opportunities and look for different things that we have available to us. So again, Nellie, thank you. Very good information today. I did get questions around, can we get slides? And we let people know that those will be coming out. So you definitely have people interested in what they want to find out about this.
Thank you so much. Again, wishing all of you a very, very safe and the happiest of holidays. I'm sure I'll be back here with Tom presenting on much more topics here. I love this community, and happy holidays to all of you. Wishing you guys a very, very successful 2024. And don't forget about the 2024 BOI mandate. So if you have questions, we have a great platform and we can help all of you. Have a wonderful, wonderful holiday.
Great. Thanks, everyone. Bye-bye.